Welcome to Crypto Simulation Theory. I'm the Gaussian Snake. Tonight we're going to discuss if Bitcoin is trapped in quicksand, which is a popular theory that Bitcoin, because it's breached its 5-day Gaussian channel, is doomed to enter straight into a recessionary bear market. So before we begin, just a reminder, join my free Telegram group. Also subscribe to this channel if you enjoy content like this and want to see more. Let's go ahead and get started and see if Bitcoin is indeed. There's Bitcoin on the 5-day. And you can see that Bitcoin has indeed entered into its Gaussian channel. While the Gaussian channel is green and concave down, which is a sign of all this bearish momentum that's happened over the past several months. When the Gaussian channel widens like this, it's indicative of more volatility. And you have to also look at the direction it's widening. It's widening in both directions to kind of reflect this descending broadening wedge, which, by the way, is a fairly bullish pattern. And you can see Bitcoin is flirting with the median line of the Gaussian channel right now in a downtrend. And so the theory goes something like this. I haven't actually watched, there's a video that I think Crypto Steve did. I haven't watched it yet, but I talked to somebody in my Telegram group. Basically, I guess the idea is that when you come into a Gaussian channel with force, mainly just, you just kind of slice right through it. That's usually a bad sign that you're going to get, further down into this and probably flip the channel red. Let me tell you, a Gaussian channel by itself, even though it's one of my favorite indicators, cannot tell you everything you need to know. Secondly, we could look at Gaussian channels on multiple time frames to see different things. I personally don't find the Gaussian channel to be that useful on lower time frames. Now, you might argue that the 5-day time frame is not a low time frame, and you could be right about that. It really isn't. But at the same time, it's not quite the high time frame that a 7-day or a 2-week time frame is. Those are the time frames that I generally prefer to analyze Gaussian channel on, and I find it to be a lot more reliable. Because truthfully, you can see things happening on lower time frames, but they can revert. The probability of them reversing more quickly is evident um, by just how volatile they can be on lower time frames. They can do the 3-day Gaussian channel if you want to. You want to go a little bit lower, and you can say, "Oh, well, this is what's going to happen to the 5-day," and you might be right. This could happen to the 5-day, but it's the same price action just applied to a different perspective, the 3-day Gaussian channel. And so we've actually fallen out of it now. So there's a really high chance this is going to flip red. I'd say it's almost a certainty. But the price is still the same regardless of where you're looking at it. I'm going to go to the 1-day Gaussian channel and you'll see how silly this is. Okay. 1-day Gaussian channel looks awful. I mean, we sliced right through it. This is like the quicksand right here. This sucks you right in. Yeah, I mean, the Gaussian channel changes color a lot just depending on the time frame. So I don't really think that, okay, someone wants to use the 5-day, that's fine, but I think you're going to find more predictive error if you're looking, and not only that, but the Gaussian changes color a lot more often on the 5-day than it does on something like the weekly. So the weekly is kind of the lowest time frame I'll really take a Gaussian channel seriously on. And even on the weekly, it's still subject to some volatility stuff. But you can see, I'll show you throughout Bitcoin's history on the weekly, the Gaussian doesn't flip green or red very often. Okay. And we really should not use this indicator in isolation of other indicators. All right. But since the question was asked in my um, group about it, I figured I'd have to address it. So on the weekly time frame, we haven't even penetrated this channel yet. So you can see we had a wick down near it, but we didn't get to it. Right. So the top of the channel right now, I think I'll pull the crosshairs out so I can get a more accurate read. The top of the channel right now looks like about 52.3K. I think there's a high chance we're gonna, breach that price very soon. And the median line of the channel is actually right in my red zone at the bottom at about 46K, and it is increasing. And it's concave down now and increasing and widening. So there is a very high probability that, all this bearish momentum is going to make its way into the channel. Now, something to understand, and I can't emphasize this enough about the Gaussian channel, is that it is a lagging indicator. All indicators are lagging to some extent, but the Gaussian channel is especially lagging. I use the Gaussian channel to kind of get an idea of prevailing market momentum so that I can kind of see where the market is going, because you can see that bulls and bears kind of play out in different stages. Now, if we're heading into like a serious bear market, the Gaussian channel gets very wide usually before this happens. You can look at back in early 2022. This is quicksand, just slicing right through and failing, as you would expect when the Gaussian is this wide. And if you go back to COVID, the Gaussian got wide, we fell through it briefly and then just bounced right back out. Okay. Usually you fall on a green Gaussian, not a red one. The red one, you're usually, kind of finding a bottom. So again, look at this end of the bear market or end of the bull markets. You're already in the bear, and the Gaussian's still green. Okay, so yeah, you're going to get sucked into it, find your bottom, and then come out in the red Gaussian. I'll show you this time and time again. So people love to misapply this channel or to give it too much importance. Here again, Gaussian gets wide, and this is on a weekly time frame. My favorite time frame, double bottom in the red. Usually, by the time you're in the red, that's when bottoms are being found and time-based capitulation is taking place. So, um, yeah, I don't have any respect for a theory that relies on a single indicator. That's why I have to use a whole bunch of them, and also just my intuition to make any kind of conclusions. Here again, bear market 2011 slice through the channel. Can you see it's the same pattern again and again? So what are we staring down now on the weekly, and why am I not panicking? Like, I'm not really thinking that we're about to head into a bear market here. First of all, it's just too obvious, right? Like, everybody's bearish right now. But it's not. If I were just looking at the Gaussian channel, I'd say, hey, this doesn't really look the way that it normally looks when we're about to enter into a prolonged bearish period. It could be that we get a very sudden drop, a sudden sharp drop with some buy volume. And that is my theory. That is my thesis, is that we are going to spend some time in the channel. I think we are going to get inside of this channel pretty soon, actually. But I think the median line is going to be a tough line to get underneath. I'm not saying it can't happen on a wick, or we can't spend a little bit of time below it, or that we couldn't even go down here, to like the 39, 40K level. I mean, any of that is possible, but we do have a fair amount of horizontal support in this region. So even if we fail to hold my red zone of 45 to 50K, you do have the lower half of the Gaussian channel, which could serve as support. I personally think that the mean line is going to be a battle zone, and it could be the place where a price reversal takes place rather quickly. Um, I mean, this descending broadening wedge could very easily be invalidated and be considered a bearish pattern. If we go back to 2019, you can see that we, had kind of a similar pattern playing out. It wasn't quite exactly the same, but it was. Yeah, I mean, I can't exactly tell you where this is going just based on a Gaussian channel. So the quicksand theory in my mind is, flawed theory in the sense that it's just basically applying a pattern that's maybe happened a few times to a single indicator. And that to me is just clickbait, honestly. So now that we've gotten that out of the way, why don't we take a look at what is likely to happen here for Bitcoin? I'm seeing a lot of fear in the market, like so much fear. It's making me feel like a bottom must be very nearby. People on my own channel are shocked by the bullishness that I have. Like, I have a lot of bullishness right now. I'll tell you what, back in March, they were shocked with the bearishness that I had. And I actually pulled out of all my crypto positions in April. Unfortunately, I went back in. Mistake. But nonetheless, I feel like I'm always bullish when everybody else is bearish, and I'm bearish when everybody else is bullish, and it's a very isolating feeling. But I have to go with what the data tells me, and right now I'm bullish for quarter 4. And I've explained this in my other videos, but I'm willing to offer many different perspectives on why I'm bullish. And you can decide for yourself if you want to be bullish too. So let's just go through kind of why I don't feel like Bitcoin being in quicksand and being stuck, going underneath the green Gaussian, if flipping red is a likely scenario. I just don't think that is what is going to happen here. I could be wrong, but let's explore why. So the first thing we need to remember is that markets are driven by sentiment. When markets are in extreme greed, they have a tendency to go down. And when markets are in extreme fear, they have a tendency to go up. So where are we now relative to where we've been? We're in extreme fear. As you can see, extreme fear is 0 to 25, and we're spending time there. And so this is generally where you would expect a bottoming process to take place. And that is kind of my anticipation, is that we will get to a bottom fairly soon. And I think it may be higher than most people think. I'm not in the process of trying to exactly predict the bottom, right? But if you look, I mean, these are the levels that you're at, during bear markets, right? So this was like a bear market period in here where we were stuck in extreme fear, and even, got down to some really low levels in June. Okay. this is when the bull market had just completely broken down. You can see in 2021, in that summer lull, we also went into extreme fear. I remember these drops, I lived through them, and we kind of built out into extreme fear, so this lasted a couple months. In March of 2020, we were only really in the extreme fear area for just a short while, and we kind of dip our head into it into November, December, July and August, and so even September, just kind of hovering at these levels, right? You have to really go back quite a ways to bear markets to see um, price or sentiment in the extreme fear levels. Okay, so I mean, we spent most of 2023 and um, 2024 in greed, and even got to extreme greed very briefly. Okay, very briefly. Most bull markets, you're going to spend more time than that in extreme greed. Like if you go back, I don't actually have the data here to show you, unfortunately, but just take my word for it. There is a fear and greed index out there, and you'll see that you tend to spend a lot more time than just this. I wonder in 2019, just kind of going back when we had that pump out of, yeah, see, you spent like just a tiny amount. So I feel like, we could spend more time in fear, but the longer we spend in here, the more likely it is we're going to start to see some kind of reversal. And in COVID, we did dip below to the most extreme fear. We haven't really gone below 20 yet. I think we will before this trend reverses. Okay, so I want to be clear that I think we are going to bottom out, and I think it's going to happen relatively soon. I'd say within the next month or so. I think we will see a bottoming out of fear and greed with a bottoming of Bitcoin as well. And I don't think that we're going to be heading into like a long-term recessionary bear market for Bitcoin right now. I do think that is coming. I just don't think now is the time. So we'll start with that. That is the fear and greed index. Let me show you something else as to why I don't feel like we're about to head into the absolute depths with Bitcoin. I've combined two indicators together here because I feel like they really complement each other nicely, and that is the Gaussian ribbon, not to be confused with the Gaussian channel, and the relative volatility index, not to be considered, not to be confused with the relative strength index. So the Gaussian ribbon, in a way, measures upside and downside volatility around a mean, and you tend to get these green bubbles when your asset's in an uptrend, or sometimes heading into a downtrend. That can happen when it penetrates the green bubble. And you get red bubbles when the asset is in a bear market or downtrend, or sometimes just a sideways consolidation. But to kind of like predict which way the bubble is going to go, you have to kind of look at the previous bubbles. And then I combine this with the relative volatility index to get a much more clear picture of how the bubble might form that's coming next. So like, just let's start where we're at. We had a change of red to green bubble. Notice that the price started pumping here. Volatility in the end stages of the bear market was pretty. It wasn't price wasn't very volatile. The most volatile moves really occurred from November 2021 until May of 2022, and you can see that the relative volatility index bottomed here, and we pretty much exhausted our downside momentum at that point. Yes, we did drop further, but June of 2022 is a very significant point in the downtrend where I feel like price-based capitulation really ended and time-based capitulation or accumulation began. And that's important because that kind of marked a change in the market structure, and you can see the ribbon sort of flattening out. And yes, there was another drop, but the largest percentage drop had already taken place. And the reason I bring that up is to kind of bring us to present day. So yes, we did move up very quickly heading into late 2023. And when we got all the way up, like you could see here, like December of 2023, that was peak volatility to the upside. And what do you notice? Like we had some trouble last year, it's unsurprising in the same time, right? We were in that accumulation period. Like this phase, sorry, I thought this was going to do something which it didn't do. Like I'm just going to draw a rectangle temporarily. Okay, so this is sort of like an accumulation range right in here. And you can see in the Gaussian ribbon, when you're in accumulation, the volatility is not very extreme, and the ribbon is also not very extreme. We had this pinch point in October where we got down to this red trend line with relative volatility, which would indicate a pretty significant event, right? So there was a drop in August, and that triggered volatility to get to a minimum around 25. And then, wow, we just took off from there way too fast. Okay, this was just too fast, too soon. And we got up to an extremely high level of volatility that's not seen very often. And we kind of dropped from there into January. And then we had another smaller leg up that took us to our, puny all-time high, right? That's the volatility of the upside. And you see the relative volatility index behaves just like a crypto. It has like a bull market peak, and then it has these dead cat bounces. And it looks like the majority of the volatility drawdown has already occurred. And we just put in this like triple top. So yeah, we're probably heading down again, but how much lower can we actually go? Like, yes, we can have little drops along the way, but I really do believe that we're going to see a red ribbon print pretty soon. And shortly after that red ribbon prints, I think in around, maybe the first week of October, second week of October at the latest, I honestly think this trend could reverse and we could see some upside. Now, this upside is not guaranteed to take us to a new all-time high, right? Just saying that I think upside is coming and relief is coming. Okay. Now, my theory is that quarter 4 is going to be quite bullish, but this, I just can tell you what I see off of here. Okay. And so that's how I combine the use of the Gaussian ribbon and the relative volatility index. Notice that I'm having to use like a lot of indicators to draw conclusions. I can't just draw a conclusion or an inference off of one. Sometimes you just have to make it simple. So what I'm going to show you here are whole moving averages, okay, which are one of my favorite indicators to use. Again, they're, for those of you who are new to my channel, these are not simple moving averages or SMAs. Whole moving averages use a different mathematical formula that actually provides a less lagging picture of the meaning of the moving averages. So death crosses and golden crosses actually take on more meaning. And I'm just going to explain to you what these different averages are because they're just colored lines to you that look pretty. So let's start from the lowest. The lowest is the blue one, which is the 50-week whole moving average, which is the shortest time frame I have on here. The white is the 100-week whole moving average. Okay. And then the red is the 200-week whole moving average. So 200-week. And then I have to remind myself of the other ones. The purple is the 300-week whole moving average. And the orange is the 400-week whole moving average. Now, I want you to see where these are currently positioned. These are longer term moving averages, right? Whether simple or whole or exponential, these are long term. 50 weeks is like almost a year. 100 weeks is like 2 year moving average. 300 week, 200 weeks is like 4 years. 300 weeks is like almost 6 years, and 400 weeks is almost 8 years. So you can imagine these are not moving averages that like can fluctuate very easily. It takes a lot of data to move them. What do you notice? The cluster of longer term moving averages, which, by the way, this 200-week whole moving average has acted as support for quite some time, right? It acted as support here when Bitcoin fell into my red zone at 49K, and it acted as support here when Bitcoin fell to 52 point whatever K it did today. That was an area of support. It is turned concave down now, so we could penetrate it, but then there's another stop down here, which is the 300 week. The 300 week is at 47. Did I say it was a 300? No, that's a 400 week, right? That's the 400 week. So the 400 week is at 47.8 roughly, 48K. So there's quite a bit of support there, you have to imagine. And then 45K is currently the 300 week. Okay. So all these moving averages are kind of clustering together, especially these lower ones. We have a death cross on the 50 and 100. I did a separate video explaining that 5 out of 5 times in Bitcoin's history, when there's been a death cross of the 50-week whole moving average and 100-week whole moving average, there was always a pump that came sometime nearby that death cross. Sometimes it happened before, sometimes it happened during, sometimes it happened shortly after. Okay. Now, just because it happened 5 times doesn't mean that it has to happen a 6th time, but I think it's quite likely. Now, look at where these moving averages are located now, and let's compare to when we're in a pretty bad bear market, okay? So look at how low the moving averages were when Bitcoin went absolutely parabolic. Like this 200, the 200 week was in the like mid 30s, right? It was rising, but it was in the mid 30s. And that's exactly where Bitcoin fell. Okay, Bitcoin's very attracted to its longest term moving averages. I'm going to show you this from another perspective after I'm done with my argument here. And then in January, February, April, this is when we actually started the bear market. Bitcoin fell to its what was this? This was, I'm getting these mixed up, right? I think this is the 400 week whole moving average, right? So it was stuck there for months. Okay, that turned out to be a bear flag, and then broke down. And guess what caught up with it? The 50 week, right? So the 50 week caught up with it, and then we got this beautiful golden cross, which corresponded perfectly almost to our bottom. So I love whole moving averages because they can tell you a story of what's happening. Look at how beautifully these moving averages were stacked. You had the 50 above the 100, above the 200, above the 300, above the 400, almost perfectly. This is how you know that you're in peak mania. That never happened yet. It just hasn't happened yet. Let's go back in history and see if this pattern repeats itself, and then kind of, yes, it does, right? So we did not have a 400-week moving average for very long in the 2017 bull run, but look how nicely these moving averages were stacked during mania. Okay, and then the 50 is the first thing to go, followed by the 100, and then so on and so forth. But each one of these moving averages provides a bit of support until you pretty much break all of them, and then the 50 ultimately bails you out, right? So the 50 turns up and bails you out. Okay, we can go back to another previous bull market. This is the double top. Again, this time we didn't really have much to work with, right? We just had a 200, a 100, and a 200 was very newly formed, and a 50. So, but similar idea, like these were all stacked up during each leg of these mania phase. If there was a 200, you can imagine it would have been stacked up nicely here. And you first fall to the 100, and then you fall to the 200, and that kind of provided quite a bit of support for a while until it didn't, and then the 50 acts as resistance until that golden cross. So we're kind of in a period, I think, where all the moving averages are kind of getting mixed up. So you saw this in 2016, where we didn't get a death cross, but we had several close calls to almost getting a death cross in 2016. If you go to the cycle after that, okay, when you start to come out of the bear, right, you have these moving averages turn up and then get very tight and all messed up. And so you're still kind of in that like accumulation zone, and and we tested the bottom, right? We tested this previous bottom, and then that was at 3,000 something, and we wicked down to just a little bit higher, like 3,800, but in a slightly higher low. That confirmed macro bullish structure, and off we went. Okay, but you can see, just like if we like really like flesh this out here, we had a death cross in December of 2019. Okay, we are currently in September of 2024, but we had a death cross in December of 2019 after things just went up way too quickly and they couldn't sustain themselves. Sound familiar? Okay. Price did go down very low. I mean, I'm not going to lie, this was a brutal, brutal drop, and we can look at other indicators to kind of compare this drop, because I think we're in a somewhat similar situation, maybe to what we experienced here. Like if we consider where we're at now and maybe where we're heading into next year, I don't think this will play out exactly the same, but see how you had this descending wedge, you had a death cross, but notice that we did have a pump. We did have a pump here. Now, if I turn on the Gaussian channel, it'd be kind of interesting to see, because we are in a weekly time frame. I know this is going to get really, really messy. So let me turn off some of these moving averages. I think you've seen enough of the moving averages, right? I've already told you where they're clustered and all that. But look at where this pump happened, right on the median line of the 7-day Gaussian channel. We pumped after that death cross of the 50 and 100. Pump and dump, pump and dump. So every 50 and 100 death crosses had a pump and dump. This happened every single time. So this is why I've been kind of saying, like, I think we're going to get a pump. Now, I can't tell you, and I think it's going to occur around the Gaussian channel median line, because that's where all the moving averages are clustering, the longer term ones especially. And there's some metrics that are getting quite overextended, and I want to explain what one of those is. One of those is the KZX RSI, and so I'm going to pull this up. This is an RSI that I like to use to kind of visualize periods of being overbought and oversold. So you can see that for 2023 and 20, we've been pretty darn overbought and kind of moving down ever since. Okay, and we're at levels now that are pretty low, but could go lower, honestly, and probably will go lower. But you can see that the rate of change at which this is decreasing, which is, by the way, the stochastic RSI, we can pull that up too. So I'll put that below. It's getting pretty low. Like this is the rate of change of the rate of change. Okay, it already peaked out to the downside here, and it came back up. This is showing a downtrend that's slowing down, not accelerating. Now, this doesn't mean we can't just dive back down underneath here. We certainly could. But let's go to 2019 for some context and see what happened then, and if this looks anything similar to 2019 heading into 2020. Okay, you can see that there we go into that pump, right? When we're down at these levels, like in the 40s, what happened? We got a pump and then we had a dump. Okay, we had a see the RSI was kind of doing what it was doing now, and it dumped a little bit, and then we had this like really dramatic pump and then a dump. Okay, so I think the odds are something similar is playing out right now. Like this might turn down a little bit. We're probably going to see a drop into the channel. I think that's quite likely. But then I think we're going to see a pump. Now, where that pumps to, I don't know. No clue at all. No idea. I've given predictions in my video. I've said I think Bitcoin will go to 90 to 110,000 by the end of the year. Okay, so I'm on the record saying that that's what I think. That doesn't mean that's what's going to happen. That's just what I think. Everybody has a theory, and that's my theory. Okay, so I do not think that we are going to repeat the KZX RSI levels of the bear market. Okay, in 2019 we didn't. In 2020 we didn't do that. Okay, so although this was a particularly brutal bear market, as you can see, getting down to these deep levels, triggering the red. We didn't even trigger the red in 2019. We triggered it in 2018. Okay, we triggered it in 2015. So at like really, really significant bottoms. Now, granted, the stock market is in a bit of a pickle right now, and it's not doing very well. So we are a more risky market than the stock market, right? So we do have to also keep in mind that the market is very much risk off right now, but we also have rate cuts coming up, and we know that rate cuts can provide a bit of a bullish stimulus, at least temporarily, before a recession occurs. So I'd also like to look at some shorter term moving averages. This is the Trix bubble, TRX. It may be a little hard to see on your screen, but if you can, the green is the 5-week moving average. These are not whole moving averages. I believe these are simple moving averages. The red or this pink is the 7-day or 7-week. The red is the blue, which I can barely see here, is the 9-week. The red is the 11-week, and the black is the 14-week. So when these are all turned down, that's of course bearish. When they're all turned up and stacked, that's bullish. And you can see that these have been turned down for a while, like since April of 2024. They have all been turned down. They had a very volatile push down and a less volatile, just looks kind of bouncing around. It looks like it wants to move down one last time. But then I think we're going to see a pump. And where have we seen this before? I'll tell you where we've seen this before. You guessed it, 2019. Okay, so in 2019, the same phenomenon played out. It didn't play out exactly the same way, but it looks similar enough. We had downtrend started in August of 19. Well, downtrend started before that, but shortly after rate cuts in July, or was it June or July, somewhere around there in 2019, the downtrend really picked up on the shorter term moving average, and then we got this double bottom on the shorter term moving average, and then boom, we rocketed off ultimately to a lower high in February 2020, and the floor fell out. Okay, this was a very painful, quick move compared to this here. So I'm anticipating something like that to play out here as well, that we're going to carve out some kind of bottom, probably this month and into maybe October, have a bounce. And I am guessing that bounce could be a lower high. I don't know. That's the unknown. These moving averages now are, the slope of their decrease is not as extreme as it was in 2019. It was going down a little more sharply there than it is now. Okay, it's more kind of flattened out. Like you saw this with the Gaussian ribbon too. So, and with volatility, so it's less volatile to the downside. Kind of just makes you wonder what's coming next. I think because it's not turned down as far, we can actually explode a lot higher. So My prediction is we will actually go higher. And I think that at that point, as we head into 2025, and I do think the rally could sustain itself potentially till February, I think we'll start to roll over in a much more dramatic way and things are going to get way more volatile. That's what I think. Okay. You can get a lot of information from following the shorter term moving averages. Don't discount those, even though they're not as, broad as the other ones, they still matter. Okay, so I still look at them. Very complicated indicator called the 3D wave trend. I don't really put it on my channel very often anymore because it is so complicated. But think of this as a kernel moving average line, and just look at these dots. This green dot corresponded to a bullish divergence. This red dot corresponded to a bearish divergence. So bullish divergence, May of 2024, bearish divergence, June of 2024, bullish divergence, July of 2024, and August of 2024, another bullish divergence. So we've had two bullish divergences. You can see the depth. This is like almost like a volatility. These are moving averages. Like some of these are like shorter term moving averages. This is kind of like when you're seeing this redness sort of appear, that's indicating that you're kind of in an oversold condition. So we're getting into oversold territory. And the kernel moving average is starting to kind of flatten out a little bit, indicating that a reversal is likely. Let's look at what happened in 2019 because I really feel like that's the most similar thing we have to look at. So we had this really slow bleed, kind of like similar to what we have now, and we had these battles, right? So you had a green, green, and then you had this dip. Did we ever make it into like the really, really, I guess, light red territory of super, super oversold? No, we didn't. We didn't. It takes an event like this to get you to back. It's like think of like a bouncing ball. Like you have to go up really high to be able to come down really far. So it's like gravity will pull you down, but the market tends to equalize itself. So like the higher up you go, the harder you're going to fall. Like all the way up here, and we did fall, and we had a summer lull, but even then we did not get to max oversold. It took us till 2022 to really start to see this bottom out in a big way. Okay, so I love this indicator. I'm not like, I don't use it a lot, like I said, on my channel because it does tend to confuse people because of how complicated it is. But I'm bringing it up here just to illustrate why I feel like a reversal is likely. I feel like we're starting to see a little bit of a battle between red and green, right? So red is no longer as dominant. You would never know this looking here, but this kind of measures the ebb and flow of the waves. And I have another indicator that does that as well, um, in a less complicated way. It may not give you as much information, but this is the wave trend oscillator. Similar idea. So when you get to a peak, like this would correspond to like kind of being relatively oversold, or your wave momentum has peaked. If you think like waves in the ocean, you get a red dot to indicate a little bit of bearish divergence. Well, so what happened is in late 2023, we got up into this region, we printed a bearish divergence, we went down, we got back up into this region, printed a bearish divergence, had one last time, we printed a head and shoulders pattern, which is very bearish, right? So we headed down into the depths, and now we're down below the zero line. What happened in 2019? Okay. Something much quicker played out, but it was similar. Did we need to come down here? Usually we don't hit this green line or this green area unless we're really, really oversold, like bear market oversold, right? And so like, yeah, I mean that happened in December 18. We recovered way too fast, and then we came down to like the -40 level, okay? And then we went on to put in the peak of our market, printed our green dot at the bottom. Okay, July wasn't the bottom of the market, but that was, remember what I said earlier? That was the most dramatic drop. This is waves, okay? And we got back up into this region. It took us a while, but we're almost at the levels that we were at in 2019. We would just have to drop a little bit farther, and maybe a good place to drop is around here, right? Because this would be, you know, sort of like a place that we've hit as resistance in the past, so maybe it would act as support on the wave trend, or it could be these levels here. So somewhere in this band, I think we're still going to fall a little bit farther, and I think price is going to go into the Gaussian channel, but I think it's going to reverse shortly after that. Okay, I think I've given you, I was going to show you even more stuff, but I think I've given you enough here. I know on my channel, sometimes these videos go for like way too long, but I'm not here for clickbait. I'm not here to try to get as many views as possible. I just believe if I can reach even one person and help them with their trading, because I was so lost when I entered this market, then I've done my job. So, I'm not into vanity. So yeah, my videos are long and they're dense and they're full of information. But honestly, I think just to come back to the beginning of this video, which is Bitcoin about to be stuck in quicksand? I think the answer is no. I think Bitcoin's going to have some trouble this month, and it may have trouble extending into October for a little bit. That's normal, that's expected, and that's okay. I'm like a weather forecaster, right? So I can't just look at one indicator. I can't look at a Gaussian channel and say, oh, this is going to happen, that's going to happen. I think a lot of times YouTube influencers do that out of like laziness, and they just want to get videos out. They just want to get as many videos out as they can, and it's dramatic and exciting, and it gets everybody scared. And then what they'll do is they'll put a video out on the opposite thing the next day, hoping you forgot what they said earlier. I'm not going to do that. I believe in being 100% honest and upfront with you. And if I screw up on one of my predictions, then I'll tell you, yeah, I screwed up, and I'll try to learn from it. But ultimately, I know I'm going to get things wrong. I've gotten things wrong because the market is fundamentally unpredictable, just like the weather is fundamentally unpredictable. So, high likelihood, in my opinion, if I was going to do a weather forecast, that price is going to go up in October, in the October timeframe, quarter 4 timeframe, and have that rally. I think it's going to go higher than our previous all-time high and stop out somewhere in the 90 to 110K range. I could be completely wrong. It could go even higher than that. And if that happens, I'm going to think, okay, bear market coming, probably in quarter 2 or even late quarter 1. All right, so I'll react to what the market gives me. That's what I always do. I hope you enjoyed this video, and I hope you're enjoying my style of analysis and learning a heck of a lot. If you have any questions about the indicators that I use, or like what they're called, where you can get them and look at them, um, I may not know the answers to all of that because some of these indicators are quite obscure. But just come to my Telegram group, the Snake Pit, and ask in there, or you can ask in the comments below. Um, if you do you agree with me? Do you think that Bitcoin is stuck in quicksand? Do you have an opinion on that? Um, do you think that we're going to be entering into a really bad bear market and bottom out like around 20K or something like that? I've heard people calling for all kinds of really, really low prices. Um, Let me know in the comments what you think. So like this video if you enjoyed it. Subscribe to my channel if you're new here and you want more content like this. Otherwise, I'll see you in the Telegram chat. That's where I'm most active. And otherwise, yeah, I look forward to talking to you again soon. This was Crypto Simulation Theory. I'm the Gaussian Snake. Nothing in here is financial advice. Hope you have a great rest of your weekend, and I'll see you again next time. Bye.